Well, I'll tell you, Tim. I don't know if I would call it excited as much as some cautious optimism. The one thing that I'm happy to see is that gross written premiums for the last 3 years have gone up. We're the industry in general, according to the Milliman report, is turned to profit the last 3 years. And I caution that only because...
Welcome to the Aviation Insurance Podcast, the podcast that helps aircraft owners and aviation businesses learn and understand the complex world of aviation insurance and risk management. From the basic principles of aviation insurance to risk management techniques and updates on the aviation insurance market, the Aviation Insurance Podcast is your guide to traverse the world of aviation insurance. Now, here's your host, Tim Bonnell.
Well, welcome back to the Aviation Insurance Podcast, where we're talking about all things aviation insurance, safety, claims, and it's always fun to bring on leaders, thought leaders, experts in our industries to bring just a little bit different angle about topics on aviation insurance. And it's been a while since we talked about claims. And so I'm very excited to bring on Mike Warren today, who is the Executive Vice President of Old Republic Aerospace and General Counsel, among many other things from my understanding there, who is very well respected in the industry. And he's going to talk to us a little bit about aviation insurance from the perspective of the main claims man at one of our insurance companies. So I'm very excited today to have Mike Warren with us. So Mike, welcome to the podcast.
Oh, well, thank you, Tim. And thank you for having me, especially on Tuesday, November 5th, when, of course, nothing else is going on in our country. If I may, I'll just start with a brief background. So I started my aviation insurance career with USAIG back in early 1985 in the airline department, and it was just pure coincidence. It was the first job really out of college during a recession when I was pounding the pavement looking for a job. And it worked out incredibly well. And who knew it would put the rest of my entire career into motion. I started with US and of course got incredible experience right away. I was there about 3 months when Delta Flight 191, a wind shear incident occurred in Dallas-Fort Worth Airport. And I was immediately sent to the site, not even knowing what one wears to a crash, but really got my hands wet pretty quickly. Fast forward about a year, and I'm working on the Pan Am account, and there's a hijacking in Karachi, Pakistan. So here I am, all of 25 years old, and I'm over in Pakistan, trying to manage a bombed out 747 that has multiple deaths and injuries, and I lastly worked on for USAIG, worked on the Pan Am Lockerbie incident, amongst the typical attritional losses that I'm getting day to day, but ended up spending a lot of time in London and in Scotland, managing the death cases that arose out of that tragedy. It was shortly after that I decided that it was time to go into private practice, and ended up with a aviation focused defense firm in New York. Spent 7 years there, and was then approached to partner in an international claims and litigation management concern that was representing London aviation insurers on amongst other things, the AMR, American Airlines account. for better or worse, it ended up being one of the worst chapters in American Airlines history because they had 3 major losses in about 14 months, 2 commuter crashes, one in Roseland, Indiana, one in RDU, and then finally a 75 American Airlines flight that crashed in Cali, Colombia, South America. So, certainly by that point, and that was in December of 95, I had, had the opportunity to manage aviation losses and catastrophes, both domestically and internationally, and think I had a worldwide experience. So from there, I was approached by travelers to do a startup for them. And unfortunately, by the time that got off the ground, they had a change of heart and decided that aviation risk exposure wasn't for them. And I moved on 15 years ago to Old Republic, which was then Phoenix. And I was hired as first as director of claims, and a year later promoted to general counsel and director of claims. So that's kind of the background right now. Amongst other things, amongst my broad legal responsibilities, I manage our 3 major claim units, which are essentially our direct general aviation losses, our quota share losses, vertical programs, and our workers' comp claim department. So that's kind of the background.
Yeah, it's man, time flies. I remember a number of those things, and it's hard to believe just how quickly things go. And for those of us in the industry, it's always fun to be somewhere like the Aviation Insurance Association, where we chatted, or we were at the NBAA as we're recording this about a week ago. And, just to hear all the claim stories that you're able to share. Obviously, you're not able to share all of them at the time, but claims guys never have a lack of interesting stories, and they're always popular from that degree. And we won't get into all those stories, unfortunately, today. But, we always like to look, with industry leaders like you on, what, if anything, are you excited about from your perspective, obviously, the thing you sit in about the aviation insurance industry or market today?
Well, I'll tell you, Tim, I don't know if I would call it excited as much as some cautious optimism. The one thing that I'm happy to see is that, gross written premiums for the last 3 years have gone up. Where the industry in general, according to the Milliman report, is turned to profit the last 3 years. And I caution that only because, we're still seeing the impact of adverse reserve development as a result of the recent phenomena known as social inflation. I call it claim inflation. And the impact of things like nuclear verdicts. We're also noticing, of course, that premium increases in the industry over the last year or so are more tied to increased exposure rather than to rate increase. And we're seeing desires and demands for higher limits, again, as a result of, what we're seeing on the claim side and on the litigation side. So we're seeing more risk, more exposure, and that's kind of resulting in more vertical programs. So that's, we think that by next year, rate increases are fairly stalled out at this point. We expect they'll be flat or decreasing by next year. And so, to be optimistic about profits, again, you got to take it with a little bit of a grain of salt. Other items that we can be, I think, excited about are, continued improvements in the safety safety measures that manufacturers and component part manufacturers are taking with new equipment. It bears out, and we're seeing less frequency of serious losses. On another note, I find the increased usage and the attempts at the insurance industry to keep up with the increased usage of drone coverage to be rather fascinating. You know, where there's been such a tremendous influx and drones are being used in so many industries now where we provide coverage. It's everything from municipal use to agricultural use, the entertainment industry, which is certainly big here in the Atlanta area, wildlife management, land management, oil and gas. We're finding more companies are basically found a cottage industry and are basically, operating hundreds of them. And we're doing them, on kind of a blanket form now. We're doing them on a reporter form basis. With the increased use in the agricultural industry, we're, trying to figure out exactly how much chemical they can carry as they continue to grow and provide chemical coverage. So that's been kind of an interesting development and kind of fascinating one for us to keep up with on the underwriting side, and for me on the legal side to continue to write these manuscript endorsements to help us along. So,
yeah, it's the aviation insurance industry has always had to work with the innovations in the industry, and so policy forms are filed, and so time you get something new, a lot of times insurance underwriters and claims professionals have to get very creative in addressing those risks by creating a legal and yet a capable endorsement that would address all those risks. And that's not something everybody sees every day. So that's probably, and you don't have claims data on a lot of new risks to draft those on. So it could be a very interesting thing. Well, moving kind of into past we're excited about, I always like to ask what people are concerned about, with the industry and with someone in your position and with claims, you wonder what also is impacting claims. And so, I anticipate those two go hand in hand about your biggest concerns about the industry and the biggest factors affecting claims today. And so I'm assuming those go together. What would that be for you?
Yeah, Tim, what concerns the general aviation industry, goes downstream to aviation insurers and typically, to claims as well. So, I think top factors and concerns in the industry, first of all, are things like the labor shortage. Okay. And by that, I mean, in typically critical positions, whether it's air traffic control, pilots, mechanics, engineers, and you kind of whistling past the graveyard because eventually you have people with less experience in critical positions, and it naturally leads to bad stuff, claims. Related to the labor shortage, of course, and I think the industry is doing things to try and improve that, but we're still in that kind of state of the market. Related is both the availability and the cost of both parts and labor when it comes to claim functions, and it is we're still seeing supply chain delays, shortages. It's having a major impact on hull repairs. Hulls are costing more to repair. They're taking longer. That in turn impacts when we have like extra expense coverage and we're paying for somebody to lease another aircraft while theirs is being repaired. Well, theirs might not be repaired for 9 months or a year because we can't get parts. The cost of labor for repairs has gone up probably 22% in the last 2 years. So, again, as you continue to go down the flow chart on these things, as I mentioned, it affects extra expense, but it also causes us to total more aircraft because of what they're insured for and the cost to repair them. On the other hand, insureds don't necessarily want them totaled because they can't replace them for a reasonable cost anymore. This kind of social economic condition has certainly had an effect on the value of pre-owned aircraft. And so I encourage everybody, look at what you have your aircraft insured for. We're finding we work with our insureds, but half the time we can total them, sell them for salvage, and get more than the total insured value. So the market has really changed in that regard. Other concerns, and I touched on it earlier, and what would any discussion be without mentioning social inflation and nuclear verdicts, and their impact on our business. Social inflation, the frequency of claims is going down a little bit, but what I call the perceived severity is going up. The injuries haven't gotten worse, the deaths haven't gotten worse, but the values have gone up because of the awards and settlements we're seeing, and again, that has these changes in value have significant downstream impact, not only on verdicts but also on demands that we're seeing in litigated cases, as well as settlements that are being offered, and needless to say, it's also having an impact on adverse reserve development, affecting profitability. Nuclear verdicts, not terribly different. They're a huge fear factor in our industry, and it impacts everyone in the stream, from insureds through brokers, through insurers, and all the way to reinsurers. Reinsurers in Europe, for the most part, hear these things, and that's all they hear about, and they start going into nail biting mode. So it has a major impact, and plaintiffs' attorneys are savvy enough to know how to use it to their benefit. So, I think two other concerns I'll mention briefly. One is, with regard to weather catastrophes, we're certainly seeing a significant increase in tornadoes and hurricanes due to changing weather patterns. I'm not sure if anything we can do about it, but I will address one suggestion later. And the other thing is, despite all these concerns, we're still seeing overcapacity in the marketplace, both at the direct insurer level and at the reinsurance level, which has the biggest impact on flattening and decreasing rate.
At Aris Insurance Solutions, our customers tell us that they work with us because we are responsive, we get back to them quickly, we're reliable to get the job done and follow through with what they've asked us to do. We communicate effectively so they always know what we're doing. We anticipate their needs so that they don't have to think of everything they need in their aviation insurance program. And this and many more reasons are why people work with Aris Insurance Solutions. To learn how you can contact and work with Aris Insurance Solutions, click in the link below for all that information. Yeah. And, obviously a lot of people know exactly what you're talking about on a number of terms. This, going back even to social inflation or nuclear verdicts, the social inflation, meaning because this, and really as regards to aviation, because this is, some aviation type of loss, we need a very large settlement, and which is leading to these nuclear verdicts, which even in general aviation, certainly in airports or commercial, is hundreds of millions of dollars, and that continues to rise. And so everything you just outlined, and the increasing cost to handle the claims, to settle the claims, the wards, the cost of labor, the cost of parts, the availability of parts, the cost of the aircraft, all lead to much more expense, and losses paid out by the insurer, while for some reason we've got new insurance companies coming in. That's that increased capacity, both, as you said, directly as the insurance company, aircraft owners, aviation businesses, airports work with, but then those reinsurers that you, the insurance companies, go to, and they have pricing. And so obviously the more competitors, the more competition for pricing. So the pricing comes back down, and you said it well, you're seeing it really stabilize, maybe even start to decrease, from now into the next year or two plus. And we always have an up and down market because of that cycle of competition. So that's really a challenge for insurers, good thing for customers. But at the end of the day, it'll go back up for customers again because, insurance companies are for-profit businesses and want to make a profit. And that key is bringing enough, more premium really, to pay the losses that are there and then still provide a return to shareholders. And so that's so important to tie together everything you just said in the last several minutes, is the fact that everything's more expensive, costing you guys a lot more money, is a lot more difficult to deal with, yet there's more people coming into the aviation insurance market on the direct and reinsurance side, creating, rates that are going to stabilize and come down. And while everyone wants that to happen, it's not necessarily helpful in the long term. And so at the end of the day, though, you've been doing it a long time. At this point I have, and certainly my father before me. It doesn't change, though, does it?
No, it does not. It is absolutely secular. And, there will be markets that see a nice profit made for a couple of years. And so they dip their toe in and they're in and out quick. And there's others that last a little bit longer, but then start to pull back and ultimately, get out. And we just see it time and time again. It's a constant cycle. I think one of the long-term effects, though, we'll see right now of what's going on, again, social economic changes is the furtherance and the further usage of the quota share programs and vertical programs. I think that'll be here to stay as insureds want higher limits or feel they need higher limits, and they probably do. But at the same time, it allows insurers to kind of manage exposure and manage risk. So I think we're gonna, and again, whereas that really started first in the major loss area, the airlines, the major manufacturers, engine manufacturers, it's really now almost in every segment of our business, whether it's agricultural or corporate and our municipal accounts. So, you get a loss like the O'Hare bus shelter case where they award $148 million. Well, guess what? No one insurer wants to take that risk on ever again. So those type of accounts now go vertical.
Yeah, and for listeners who may not be familiar, in a vertical placement, the limits of the exposure is so great that no one insurance company, even with reinsurance, wants to take it on. And so a broker like myself will have to go out and get more than one insurance company to complete that placement. And that's when they're taking each company's taking a share of that risk. And so it's often called a quota share placement or a vertical placement. And on the European side, they call it a subscription basis placement, but it is, in aviation, there's a lot of exposure, and so insurance companies still want to make money. And so that's been the concept all along, though, in aviation insurance, is finding ways to spread the risk and yet still make a profit. And so pooling, reinsurance, quota share type have all been great tools there. So you've been through a number of these cycles, as we were talking about. And from a claims perspective, we've got the increased costs. You talked about labor shortages, a nuclear verdict, and I know you don't have a magic crystal ball that can, adequately predict the future, but based on the trends you've seen, what will, how long does it change, to where a lot of these things start to come under better control, or what things have to happen for the claims part of the market to stabilize a little more?
Yeah, I think, obviously, from an underwriting perspective, the quota share programs help to stabilize risk and exposure a bit. On the claim side, there's a couple of things that either need to be done or in my humble opinion, should be done. First of all, I think that insurers need to start taking a hard look at their cases. Take a deep breath and maybe try a few more of the right cases. Defense verdicts are still available. They still are achieved every single day. You just don't hear about them because they're not newsworthy. Okay. But we've got to get the courts back to applying precedent, applying the law as it's written. Wrongful death statutes in every state are very specific and kind of limit exposure for us. But if we don't ask the courts to apply it, if we go out and settle the case, you can't blame the system. Now, this could be painful. You may have to take a verdict and appeal it. But I think, we as an industry have got to start looking at these cases and say, enough, and try a few cases. And again, force the courts to do their job rather than wash their hands of it. Because courts love when we settle cases. And again, if we settle it for way too much money, that's on us. So I think there's things that we can do in that regard. The other thing I would mention is, with regard to the adverse reserve development that I've mentioned, I think that it's very frustrating, especially on aged inventory, to get constant, spiking of reserves years after the incident occurs. Social inflation, financial inflation, nuclear verdicts have all been a cause of that. But I think that insurers in our industry have to start to factor that in at the beginning. So, reserving is forecasting an ultimate result. You're already considering things like liability and damages and the venue you're in. Well, I think that, social inflation has got to be considered a new norm, and you're going to have to factor that into your initial reserve rather than pop it 5 years down the road. And I think everyone will be happier to at least have that at the beginning, take a more conservative approach. And this way we don't, have those things coming, after we've closed books on a given year. The one other thing I would mention in that regard, well, maybe two other things. I mentioned weather losses earlier. We have been concentrating here on our relocation coverage. It doesn't require an occurrence, but if you're in the zone of danger where a hurricane or a tornado is heading and you do get fair notice, then move the aircraft. We'll pay for it. We've even worked some reciprocal programs we have a fair amount of universities that offer flight programs that we insure. We've offered reciprocal programs where if one is in the way, they move their fleet to the other university and vice versa. So I think we have that arrangement, amongst others, with Auburn and FIT. So these are the kind of things that will help limit loss. It's better certainly to pay a relocation expense for a tie down and some fuel rather than having to total, a Piper or a Cessna aircraft. So that's certainly one thing to consider. The last thing I would mention is, and this is more of a dream of mine more than anything that's necessarily in the works, but, eventually we may come to a place where we need to have some government intervention on behalf of the industry. And by that, I mean set some caps on compensatory and punitive damages because of for in the public interest for the goodwill of the citizenry. Because, if we keep seeing these kind of crazy verdicts, and again, those verdicts often in our industry are fueled by the fact that we offer higher limits in a lot of segments of our business. Manufacturers of GA aircraft, component part manufacturers are going to have high limits. And guess what? Plaintiff attorneys live for this stuff. So putting caps on some of these things may be the only way to keep things within reason so that people can still purchase aircraft, get their aircraft insured, and maybe even, need it to eventually buy a seat on the aircraft. Short of that, we're all going to start to see sublimits in every element of our business.
Yeah, and a lot of people, that's a controversial subject. I think we often in the industry call that tort reform, but what people don't understand is it does directly affect them. Without insurance, there's not aviation, and when risks can't be mitigated, the availability to travel and stuff is reduced. And so it is in the public's best interest to have reasonable limits set. The government does it itself on their risks, and so it doesn't seem quite fair, does it? Well, we could keep talking all day, but in the interest of your time, as I asked of it, I'd ask just, was there any questions I should have asked but didn't, or do you just have any closing thoughts to end our time today?
The only thing I would say in closing, Tim, is we always have to keep an appreciation about the scope of our universe in aviation insurance. We're a very small piece of the P&C world. All right, there's about 200,000 general aviation aircraft in the U.S. Only about 16,000 of them are corporate type aircraft. There's only about 3,000 airports, and that includes glider ports and balloon ports and military airports. So there might be less insurers that typically play in our arena, but there's much less widgets to compete for. And of course we all want best in class. So it is a very competitive industry. I think we're all fortunate to work in it. I wouldn't want to change a thing in that regard, but when there's, 1.5 million passenger cars in Cook County, Illinois alone, and 200,000 GA aircraft. And then, of course, to make it more competitive, as you know, aircraft and aviation insurance is not mandatory in most states. So we fight that battle as well. So maybe something ultimately has to change there as well.
Oh, that's good. And it's always, as I said to start the show, it's always so interesting hearing from aviation insurance claims people. And what an honor it is to have you here today, Mike.
I appreciate the opportunity.
From your level, you're an executive at it. You've been doing it a long time, and you've seen a lot of different things over the years. And I'm sure that would be, a saga in itself to hear about some of those things. So yeah, thanks again for giving us your time today. I know that our audience will be very informed and even a little entertained by this information. So thanks again for your time.
My pleasure, Tim. Thank you.
Yeah. Well, that's all for this episode. Join us again next time as we continue navigating the waypoints in aviation insurance. Until then, enjoy clear skies and unlimited visibility.
Thanks for listening to the Aviation Insurance Podcast. If you found this episode of value, please share it with someone who would benefit from this information. Don't forget to subscribe in your podcast player so you don't miss any new episodes, and to help our show have more impact. This episode is brought to you by Aris Insurance Solutions, your flight plan for navigating the turbulence of aviation insurance. For more information, visit arisinsurance.com. That is www.aerisinsurance.com. Disclaimer. These episodes are for educational purposes only, and due to the changing regulatory and legal nature of the business, some information may change over time. Having a well-educated and experienced aviation insurance broker on your team is an absolute requirement to success in business and for managing your aircraft and aviation business risks.